Good morning, friends. There was an update regarding a company called GE Power India Ltd. The company secured a 38 crore order from NTPC Limited. The shares of the thermal and hydro plant operator gained 6% after company secured a prestigious work order. However, since this price moment, the stock price is corrected again, and whatever gains that it had made post this news, they have actually subsided and gone back to negative sort of trend. So we'll catch up the trend accordingly. Market cap of 1,776 crores, trading at 264. The previous closing was 250, so the price is back to the similar kind of range. The reason for the rise was received a purchase order amounting to 38 crores, excluding GST from NTPC for the supply of generator parts for their Talcher site. Financial performance: the company reported a zoom of 46% year-on-year revenue from 217 crore to 317 crore. The net profits have declined uh, by 128% year-on-year from a profit of 67 crore to a loss of 19 crore over the same period. So industry overview: the global economy is projected to grow at about 3.3% in FY 25-26, below the 2000-2019 average of 3.7%. India remains resilient towards 6.5% growth. Energy prices may drop by 2.6% due to weak Chinese demand and rising non-OECD supply, while India's energy sector shift towards renewable. Order book inflow: company has tripled year-on-year, 461 crores, led by a 348 crore NTPC steam turbine upgrade order. Quarterly revenue rose by 8% to 317 crores with 8 crore profit. The order backlog stands at 2,700 crores as of December 31st, 2024. In December 2024, India's power consumption rose by 6% to 130 billion units, with peak demand projected at 270 gigawatts in summer 2025. Management remains optimistic about renewables, while the company actively bids for FGD tenders, expecting strong order bookings after regulatory clarifications. Future outlook: the management remains confident in the company's strategy and operational rigor, aiming to leverage emerging opportunities in services. Focus continues on de-risking the portfolio through shorter working cycle capitals and higher margins, while ensuring environmental compliance and supporting India's shift to sustainable energy solutions. Company snapshot: GE Power is engaged in engineering, procurement and construction (EPC) of key equipment for thermal and hydro power plants. It is one of the leading players in the Indian power generation equipment market. So let us look at some other sets of information. There you go. Okay, there we go. So this is it, showing the prices dropped down to 241 rupees. So a drop of 6%, that was yesterday. Overall, last 5 days a drop of 3%, so from 250 down to 241. Then again, you see the last 1 month it is only added 0.86%, which is just 2 rupees. Over the last 6 months, it is trending with a negative return of 33%. Overall, in the past 1 year, negative of 29%. We've been through this. The company was founded on 2nd September 1992 with headquarters in Noida. Uh, this is it. More same about the same order. The trend by the market suggests neutral, as in performed well, low performer, overvalued, market average. lagging behind market financials. Profitability not good, not bad. Entry point: stock is not in the overbought zone. Stock has moderate number of red alerts, then lower than industry revenue growth, decreasing market share. So you can see the market share decreased from 0.65% to 0.36%, so which again is a concern. Revenue growth minus 2.74% based on the declining market share. So promoter holding consistent in the last 6 months. Uh, Promoter pledged holding is insignificant. Retail holding almost constant as well. Foreign holding also constant. So 68% promoter holding, mutual funds 2%, domestic institutions 0.9%, foreign institutions 0.8%, retail and public 27.7%. So you can see mutuals from 3 mutual funds from 3% have dropped to 2% in the last 1.5 year. The same goes with domestic institutions from 2% down to 0.9% in the last 18 months. Then market cap 1,600 crores, cash 151, debt 101, promoter holding 68.5, ROE minus 124. This probably is the last 12 months. Then sales growth minus 9%, ROE minus 24%, profit growth 60%. That was for FY24. PE of 55.11, which is very high indeed. Price to book value 13.5. The book value is 17.18. Engaged. Okay, we've been through this. Core services, service upgrades. Company manufactures electrical and industrial equipment, boilers, turbines, generators, air quality systems serving Bayer, NTPC, Siemens, and state and central utilities. Uh, Construction, domestic 88%, exports 12%. Supplies non-coal pressure valves to cryogenic vessels in India to L&T, various EPCs, Linde, etc. Then high of 647, low of 220, book value 18.7. Companies trading at 13 times book value, low interest coverage ratio, has delivered poor sales growth of minus 3% in the last 5 years. Low return on equity, minus 52 in the last 3 years. Earnings include an income of 190 crores, which again raises concerns about the profitability of the company. Earnings include, okay, we've done that. Company has high debtors of 382 days, which again is a cause of concern. Company's cost of borrowing seems high, so company is not getting paid in time. Debtors are taking a very long time to pay the company. Cost of borrowing is high. Some comparisons within the sector: L&T, Acme, Solar Holdings. So this company has the lowest market cap amongst the peers. The average industry P is about 30. The average median price based on 43 companies about 190. So you can see that on the pricing front also is at an expensive price. Then you can see the return on capital employed. Some have below 10 and some others have are above 15. 15 to 20 seems in a decent kind of range for consideration. So can look at companies like Techno, Electric Engineering, Viatech, Wabag, Engineers India, Power Mech Projects. So we've done some work, some research on videos on Power Mech projects. You can go through my profile and you should be able to find one of the videos done in the last 10 days. So you can have more information based on that. You can see sales have been fluctuating, they've dropped, then they picked up again in the month of December. However, from being a profitable company has gone down to a minus 19 crore profit, so negative profit. The company's gone into a loss. Operating profit has reduced, which again is a concern. Operating profit margin showing minus consistently, sales fluctuating inconsistent again. It seems that there would be a huge drop in the revenue compared to the previous years, or about a 35% drop in the revenue based year on year. And you have net profit of only 65 crores. Again, quarter on quarter is what is going to impact the market, and the sentiment will be based on that. You can see most of the figures, sales growth have been negative overall. So the concern, the company has not been able to generate new business, and it's on the declining trend. So overall, you can say that there is a further scope of correction in the price of the stock. Even at 240 today, the company is overvalued, and there would be again a lot of pressure on the financials in the last quarter of QY FY25. So again, negative sentiment would drop the market price further down. Reserves have dropped, which is a concern. Losses are making the company run into uh, problems. Then borrowings have decreased, which is a good sign. Uh, Chance of uh, overall improvement in the business in the long run. The major concern is high data days. Inventory days have gone up as well. Companies are taking longer to pay its suppliers, so 350 days is nearly taking 1 year to pay its suppliers, from an average of 200 days about 6.5 months about 3 4 years ago. So drastic decrease in performance overall. Working capital days seem to improve. There is a minus figure suggesting that the company got some advance payment towards its order, which is why the working capital days is a minus. So, friends, thank you for watching. So, it's an important aspect that this company, if you are holding any kind of holdings here, consult your financial stockbroker. The company has been on the downward trend since the last 2 years. So, with the decreasing market share and the financials not being in place quarter on quarter and on a uh, what you can say on uh, a zigzag ride, you can say, which is the reason why I would suggest for you not to look at investments here. So what you can do is probably consult a financial broker to see if you're holding this company stock, what can you do with your investment to manage your portfolio better. So thank you for watching. Please share with your friends, family and associates, those who may benefit from this information. Thank you. Wish you a happy weekend, and we'll connect with another video tomorrow. Thank you. Bye bye.